One question is about income taxes. The trustee should ask, have I done everything that I'm supposed to do concerning income taxes? And of course, the decedent as an individual has to file one final tax return for the year of their date of death and pay any taxes that are owed. So the trustee will need to make sure that that individual tax return gets filed and any taxes paid. But in addition to that, a lot of trustees don't realize that the trust becomes a taxpayer when the trust becomes irrevocable. And that happens when the grantor, the person who created the trust, dies. So now the trust is irrevocable. It is a taxpayer. It has its own taxpayer identification number, and it has to file its own set of state and federal tax returns every year until the trust is terminated. And on these returns, the trustee is going to report any income that the trust earns. And that could be from dividends, interest, rental income for any properties owned by the trust. And this will all get declared on Form 1041. And that is different than the individual Form 1040. And it's something that we don't recommend trustees try to do themselves, this Form 1041. And we always recommend that they hire a CPA to help them with that. Because Kirsten, like you just said, the trustee can be personally liable if they make any mistakes on that.
Yeah, and you definitely don't want to mess up and make your mistake in front of the IRS. That's
right.
the worst kind of mistake that you can make. So hire a CPA who has experience with these. Not all of them do it. Not all of them do trust income tax returns, but find a good one and get it done by a professional. And also, tax preparation costs money. You got to hire a CPA and you have to actually pay them. So it's important to get all of this done before you've given all the money to the beneficiaries. Plus, maybe the trust is going to owe taxes. So you need to find that out. You need to know exactly where you stand before the beneficiaries get all the money.